If you've ever wondered how some people are building tax-free income outside of their 401ks or IRAs, today's show might surprise you. We're talking about one of the most misunderstood tools in retirement planning, Indexed Universal Life Insurance, or IULs. Today on Financial Fast Track with Tod Long.
You are moments away from finally getting the inside track on finance.
You've saved, you've done all the preparation, but when it's time to execute, you have to shift from preparing to performing.
This is the Financial Fast Track with Tod Long.
What we're going to do is take the guesswork out of financial planning for you.
Making more momentum with your money.
Welcome into the show, Financial Fast Track with Tod Long. Financial Fast Track Radio is a new landing page that we've added so that you can check out the show, the last few that we've done here. We just started, is this our 6th show, Tod Long?
Yeah, 6th or 7th show, I think. I forget.
That's great. Great. I'm Jackie Selby, by the way, and I do have Tod Long here from Long Financial Services. Reachable on this 888 number we have set up for our show. 888-548-0409. I'll give that number a few more times. Hopefully you'll be listening. And again, on the website, financialfasttrackradio.com is a very nice little landing page. So tell me, how are you?
Today I'm doing good. I'm getting ready for the holidays that are coming up, and I'm sure everybody else is doing that same thing. But yeah, it's been good.
Yeah, now I can take off my World Series glasses, and I know that was a little several days ago, but now all of a sudden I can concentrate on other things.
Other things now? Yeah, the World Series was really, really good, you said.
Oh,
Yes.
it was fantastic, but I'm a baseball nut.
Yes.
I'm an MLB and NHL fan. I like I'm just not too much into basketball, and I'm not much into soccer.
Okay. MLS or NBA?
Yeah, the NBA, my mother loved the NBA. Short little lady. Man, she was in there. When we lived in Phoenix, we were from Phoenix. My mom was one of the attorneys for the Phoenix Suns. So she was in it, courtside, the whole thing.
Yeah. When I was in college, it's weird that when I was there at OU, I didn't like a lot of college sports, but I loved like NFL, NBA, that kind of thing. And then when I became a professional, I was like, I'm kind of burnt out on the professional version of athletics. So I started looking at college again. But honestly, we talked about Michael Jordan just a minute ago, but I haven't really watched a lot of NBA since he left.
Truly?
Yeah, I was a fan because of him. And so once he left, I'm like, I'll find something else to do, something else to watch.
That's interesting that you say that. I think people do have their favorite athletes, and once they are up and out.
Yeah.
Yeah.
That's what happened to me. I didn't think I was going to be that way, but because before that, it was Bird and Johnson.
Yes.
And I remember, Magic Time and all that kind of jazz. I remember that stuff on NBC in the mid 80s, early 80s. I was absolutely watching it because I was a child. And so guess what? My dad was watching it. So I was watching it.
That was a good time, though. That was an exciting time in the NBA.
Yeah, it was. It was a lot of fun. Mm-hmm. A lot of fun.
Yeah,
there was a HBO show called, I think it was called Magic Time, which was on the Lakers, and had a little bit of the Boston Celtics in it as well. But that was a phenomenal TV show. I don't know if I'm supposed to be promoting that on radio or not, but it was an awesome show. But it was about that magic time back in the early 80s.
I'll check it out.
Yeah, it was pretty good.
That's really cute. I'll check it out. Well, you being the collegiate, you started as a collegiate athlete, and I do like their story, Tod, that your parents were like, no, you're not going to be in athletics. We want you to do X, Y, and Z. And finally, you broke your dad and said, can I please go run this, be a sprinter? Because that's what he did.
Yeah. And so we got it all hooked up, and it was a quick process. As a matter of fact, once we made that decision as a family to put me in the sports and yeah, it was a quick turnaround time. I went to school. Miss Hamlin, I was my first hour teacher, and she's like, okay, Tod, thanks for telling me. I'll take care of everything else. Don't worry about it. And she got my schedule changed and told all the coaches and everything. So it was a fun day.
It was go time finally.
It was a go time. Yeah.
Mm-hmm. That's really interesting because you do have to move things around to accommodate your practice, right?
Yep. Yeah. Had to, well, I mean, I was in high school, so what?
That was your last year of high
It was
school.
my last year of high school. Yeah, it wasn't a lot that needed to change around. It was like I was pretty much graduated. It was like, okay, so we're gonna, instead of doing these electives, we just make sure you get some track practice in. All right, cool. Let's do it.
That was good.
Yeah.
And then you went on to sprint for OU. You were a Sooner.
Yeah, I got a I don't know, stamped as a full scholarship participant in roughly 2 track meets. So I went to Jinx, Oklahoma in Tulsa, right outside of Tulsa, I should say, and ran a track meet. And then the next track meet I ran was at the high school at Carl Albert, which is Midwest City. And then Coach Martin, JD Martin, he was obviously coaching then at OU. He went to see me run. And then once I got done doing the 100, 200, 4x1 and the 4x4, 3 golds and 1 silver that day. The silver was the 4x4 because I was not a 400-meter runner at that point. He was leaning on the fence by the track, and he said, Todd, come over. And so I came over. He's like, you know who I am? Remember me? Because I met him when I was a child. My dad used to go down to college and still, watch, track. And of course I was Tiny Todd and went with him. And this is back when they ran on dirt underneath the Owen Stadium. And he's like, remember me? I was like, yeah, no, not really. And so anyway, he's like, yeah, if you want to come to OU, you got a full scholarship. So I'm like, cool. I couldn't sign anything at that point, but because it was too early in the season. But eventually, of course, I signed, and it was golden.
Wow. I don't think you ever told me that story about the scholarship part.
Yeah. It was fun times.
That's really neat. And especially since you're not really the 400 runner, right?
Well, I wasn't then. I mean, I became one, but thanks to coach, as a matter of fact, because he wanted to build athletes there at OU from Oklahoma. And so the 4x1, 4x4, et cetera, were people came from, high schools within Oklahoma.
Okay.
Whether it be Lawton, Norman, of course, me, Midwest City, whatever, Elk City, whatever it may be. He tried to get those Oklahoma boys to go out and do really, really good times on a national level. And so his theory was awesome. It was very sound. And that's what we did. I didn't mention Oklahoma City because we got a lot of people from Oklahoma City as well. But yeah, we were, our 4x1 initially was started at 4x4. I think we had some pretty good times in 4x4 my sophomore year and junior year, but we really, really became really a sprint school in the 4x1 my junior year in college. I think we still have the 4x1 relay record there at OU. And that's a 38.86. And at that point in time, that was like the 5th fastest in the world at that point.
38 seconds?
Yeah, 38.36 was our
And that's
our time.
4 people in the relay?
4 people, yeah. 100 meters, yeah, each. It was a phenomenal time. That's still there today.
I feel like I could run fast for 100 meters, but not. Wow, that's an amazing record.
Yeah.
That's really fun. By the way, this is Long Financial Services Show, Financial Fast Track with Tod Long. And I know this might sound repetitive, but I feel like it bears repeating that you took your experience. I mean, this was a while ago. Took your experience in athletics, and then you were a professional athlete after collegiate athletics, and you took all of that, and you're kind of like that anyways. You're pretty focused and resilient and disciplined. I mean, you were that before you started running.
Yes, I was.
Right?
Yeah, I was.
I mean, you ran your household. You told me your mom wouldn't cook anything you didn't like.
You putting that on the radio. My mom listened to this.
I mean, you were focused, right? You were working on computers and stuff.
But I was also a finicky either. I didn't want to have all that Southern fried food stuff.
Oh.
So I'm like, can I get some grilled stuff, please?
Oh, that's cute.
Some sauteed stuff. I didn't know what sauteed was back then, but I definitely know what grilled was because they did a lot of grilling. Mm-hmm. And so I wanted that. I didn't want liver and onions. Yeah.
I still don't want liver and onions.
Yeah.
And especially cooked on the stove, at home in that big cast iron skillet.
Yes, that's exactly how my mom used to cook it. And so I didn't really appreciate that too much. But yeah, you're going to get me in trouble with my mom. So
I'm sorry. I would run over to our neighbors and see what they were having. If my parents were having that liver and onion thing, I was like, I'm going to go eat at the neighbors.
Trust me, I tried to go across the street too. So
yeah, because I'm not having that. Well, so I thought this whole discussion on the IULs is going to be a lot of fun because it's a living benefit, right?
It can be, yes.
It
Most
can be.
most IULs, no matter the carrier, will have some sort of living benefit attached to it. And those living benefits are the things you can actually use. Well, it actually makes the policy something you can use now without having to die.
Right.
Whether it be something for like long-term care type of issues, like, you have a heart attack, stroke, cancer, those kinds of things, or it's for, financial issues. If you want to make sure you have a tax-free type of income strategy, IULs can actually work out.
Wait a minute. Did you say tax-free?
Tax.
Hey,
Yes.
get the bell.
Yeah, get the bell for that one right there. Yeah, this is a way to get tax-free income. So if we haven't talked a lot about it, but what I will put out as an offer is this. If you ever wondered how an IUL could actually fit into your retirement picture, now is the time to actually find out. So we've created a financial fast track review to help you do exactly that. For the next 10 callers, we're going to run a no-cost, no-obligation analysis to see how a properly designed IUL could complement your retirement plan. This review includes a fee and risk assessment showing you where you are losing money unnecessarily inside of your current accounts. We'll also include a tax analysis to uncover opportunities for reducing your future tax exposure. And finally, we'll build a customized income plan designed to help you create a predictable, tax-efficient, sometimes tax-free retirement income, where that includes an IUL, an annuity, or any other kind of modern strategy. It's all about clarity, confidence, and control, all in one conversation. So for the next 10 callers, that's your financial fast track review, free of charge. Jackie, please tell the folks how to get in contact with us.
It's my pleasure. Use this 888 number, 888-548-0409. We have this set up just for the radio show, 888-548-0409. And we'll be right back to talk more exactly what is an IUL. And we'll be taking calls probably from Todd's mom coming up.
Tired of financial jargon that leaves you feeling confused? At Long Financial Services, Tod Long offers clear, straightforward advice about your retirement. Understand your strategies, regain control, and get peace of mind knowing exactly where you stand. Call 888-548-0409. Again, that's 888-548-0409.
Welcome back into the show. I've got Tod Long here of Long Financial Services, and our show is Financial Fast Track with Tod Long. Now, he's been introducing subjects to me. He'll send me an email, and I'm Jackie, and I'll send it back, and he'll send me an email. So what he wanted to talk about today is indexed universal life. And I would like to know exactly what in the devil is that? And how would this play into anybody's financial plan?
Yeah, good question. Let me kind of back up. A lot of people hear life insurance and they think it's something that only is going to benefit their family if they're gone, right? But an index universal life policy, or an IUL, we'll call it IUL from here on out, flips that script completely. It's life insurance you can use now while you're alive. Here's the big idea about an IUL. It actually builds cash value over time. It's linked to performance of the market, like S&P 500, UBS, NASDAQ, et cetera, all these different kinds of indexes that are out there based on what the carrier is, but it's all with zero market downside. So if the market goes up, you're going to earn some credit in your account. If it goes down, you don't lose a penny of your principal. So it's like the protection and growth all in one package. It's very similar to an annuity, but the difference is, or an index annuity we kind of talked about in previous shows. Right. But it has a life benefit attached to it as well. And we'll go into that in a few other segments. But this is really just like having your cake and eating it too, to be honest. Protection when you need it, and also growth potential along the way.
Now, growth potential, this is the thing that makes it stand out in my mind because just regular, I don't know, there's lots of types of life insurance, right?
Sure, there is.
You mentioned.
Mm-hmm.
Is this something like more modern, newer?
You could classify it as that. Okay. Index universal life policy has been around for at least 20 years, at least, if not more. Yeah,
that seems modern compared to talking to somebody who has an old experience from the 50s, 60s.
True, absolutely. Back then, it was really just whole life and term. That's really all you had.
All right.
And then eventually there's what's called a variable universal life policy. That money right there works similar to an index universal life policy. A huge difference is that variable term. That means it's in the market, which means that if it lose value, then that whole portfolio, all that cash value in that life policy will reduce value as well. Index doesn't do that. It's all based on what the index does. Our index universal life policy doesn't lose any value, as I mentioned. And how it really works is like each year your policy gets cash value is linked to that, like that index, like that S&P 500, that UBS, that NASDAQ, whatever it is we find as far as index.
Okay.
The insurance company uses what's called a cap. You should be familiar with that if you listen to the show, or participation rate, to determine how much of that growth you get into your account. So for example, if the market grows 10% and your cap is 8%, then you're going to earn 8% on that in that year. If the market drops 10%, right, that means in some accounts that are variable, that are in the market, if it drops 10%, the value of your account drops 10%. But at an IUL, you earn zero. You don't get any negative losses. So there's no losses, there's no stress. And then over time, all that credit starts to compound in that account. So that's how you really grow exponentially your cash value in these IULs.
Compounding. I like the sound of that. 888-548-0409. 888-548-0409. Call Tod Long. You can get on his schedule, have a discussion about this. If this is appropriate for you, you need help with any of the rest of your planning, because retirement is going to happen. And we need to protect this money.
Yeah. Like, you said that, and I'm going to segue into this next kind of talking point.
Please.
Is that the IUL has living benefits attached to it.
Living. Good.
Yeah. Living benefits, which means that you can use the money in your cash value, or in some cases, just the death benefit now, right? So that growing cash value can be used for just about anything. It could be used to supplement your retirement income, which I will show an example in just a second. And that's done tax-free, by the way, and I'll show you that. Yes. You can do it for paying for college. So if you didn't do a 529 plan and you have some money, cash value in this IUL, you can take that money out tax-free, pay for college.
Heck yeah.
Or this is the big one. It's used in covering long-term care costs. Again, terminal illness, chronic illness, Alzheimer's disease, those kinds of things that, some of these things are probably going to happen. And if you don't have an authentic long-term care policy, which it is long-term care insurance month.
It's long-term care awareness month.
Yes, it is. You can use these free riders that are attached to these IULs and take advantage of that living benefit. And again, when this is structured properly, is that all those withdrawals or policy loans on that money is completely tax-free. So you don't have to worry about Uncle Sam trying to take that money.
That's amazing, Todd. Even for Alzheimer's, there's no preclusion. For some reason, I'm getting real scared because one of my brothers has come down with dementia. It's just so frightening.
Yeah, there's no preclusions or anything like that. This is money that you can use for whatever you want.
Okay.
Yeah, you don't have to go through you don't have to. If I was your agent, call me up on the phone. Hey, Todd, can we see if my brother qualified? There's none of that. Todd, I need $50,000. Can I get it?
Okay.
Yeah, we can make that happen. As long as I got the right kind of documentation, let's do it.
Now, see, this is a relief, I think, for anybody who's listening, because we've seen family members, parents, siblings, in my case, aunts, uncles, grandparents, who struggle with these decisions on how to pay for care in these eventualities.
That is correct. This is not even 24 hours ago. I had a client, and I probably talked about this client before. Has a mother that has dementia, and I think she was in the hospital or something like that. And she had to figure out, I need medical beds or hospital beds at home. I had to figure out all these different things. Now, the parents don't have long-term care.
Okay.
Right. If she had some sort of IUL or if she had some sort of long-term care insurance, all those things will be covered under those policies, or it could be covered under the living benefits riders. They don't have that, so she's out of pocket with some of these things. Not all of it, but some of these things. So,
golly.
Yeah, the IULs, this is what the beauty of this, and that's not even the financial piece of it.
Okay.
But from a health standpoint,
medical piece,
yeah, you can absolutely take this money and use it for various different means, right? I mean, I mentioned the 529 plans replacement. You can do that for that. But when it comes to older parents, or if it comes to parents that need some assistance from you, and you may not have liquid funds like in the money market or cash, in savings, you can actually, if you have an IUL that has some cash value to it, boom, use that as a solution.
And you can use it for your parents' good.
Absolutely. Yeah, you can use the money for whatever you want. Buy a car, buy a house.
You can use it. Your own money.
Yeah, it's your own money. Right.
It's not locked up forever.
It's not locked up forever.
It's
again,
liquid.
it's got to be structured correctly. The IUL has to be structured correctly.
All right.
And we'll talk a little bit about what not to do.
Okay.
But if you do it correctly, and if you have a sound agent like myself, you would actually be able to take those withdrawals tax-free and pay for whatever you need to pay for.
That's amazing. And the tax-free part of it is just delightful.
That's correct. And there's one thing that inside the policy, obviously the cash value grows tax deferred, meaning that you don't get a tax bill every year as it grows. And because the funds are assessed as policy loans or withdrawals against the cash value, they're tax free. So if you're not just growing your money, you're actually doing it in a way that will minimize or even eliminate any kind of future tax burdens later on down the line. So it's really good. It's a really good policy. It's jack of all trades is what I call it.
It seems like it. And taxes are a big burden for people later in life. RMD time, early 70s, I got the big fat IRA over here.
Yes.
And now you have to wreck everything by taking this money from a tax perspective.
Yes. I was just recently working on a gentleman's case this morning, as a matter of fact. And I'm trying to get him to understand that, once RMDs hit, his taxes are substantial. If he doesn't we're talking about Roth conversions, but this is a different subject, but the same concept is there as far as taxes. Taxes will eat up and erode your value of your accounts if you don't do something about it. And so if there's a way to do either conversions, that's what we're talking about with him. But if there's a way to actually have a separate type of account, that you have your 401ks, you have your IRAs, you have whatever, those kinds of things, even Roths, but you also have an IUL as a way to have tax-free income in retirement, that's the best way to go.
I assume you're going to tell us how to fund this coming up as part of today's show, Financial Fast Track with Tod Long. We better put a bow on this segment, though.
Yeah, I certainly will. Now, again, if you are wondering how an IUL can actually fit into your retirement picture, now's the time to actually find out. So what we've done is created a financial fast track review to help you do exactly that. For the next 10 callers, we're going to do a no cost, no obligation analysis to see how a properly designed IUL could actually complement your existing retirement plan. That existing retirement plan includes your Social Security, includes your IRAs, your 401ks, 403bs, et cetera, et cetera. This review also includes a fee and risk assessment showing you where you may be losing unnecessary dollars inside your current accounts. We'll also include a tax analysis to uncover opportunities for reducing your future tax exposure. And finally, we'll build a customized income plan designed to help you create predictable, tax-efficient retirement income, whether that includes an IUL, an annuity, other modern strategies like 401ks, 403bs, et cetera. It's all about clarity, confidence, and control, all in one conversation. So for the next 10 callers, that's a financial fast track review free of charge. So, Jackie, please tell the listeners how to get one of these spots.
888-548-0409, 888-548-0409 on Financial Fast Track with Tod Long. Be right back now.
Feeling like just another number with your advisor? At Long Financial Services, you're always valued personally. Tod Long knows your retirement isn't about numbers on a page. It's about income you can depend on, security you can trust, and advice tailored specifically to you. Take the first step toward a meaningful conversation. Call 888-548-0409. Proudly serving Oklahoma. Again, that's 888-548-0409.
Financial Fast Track with Tod Long, Jackie Selby here. We've been talking about IULs. This is really a fun subject because there are so many questions I can put to you. We could keep talking for a whole nother hour. But I'm wondering, can you lose money if the market crashes and you have an IUL?
Yeah, that is one of the biggest misconceptions about the IULs, but it's also one of the best features about an IUL. So you're not in the market. Your policy's interest is actually linked to an index like S&P 500, UBS, NASDAQ, those kinds of things. So if the market goes up, you can actually earn interest, sometimes 6, 8, 10, or even more, depending upon the cap and participation rate of those that policy. That's why we, I would say that if the market actually goes down, you simply earn zero for that period. So there's no loss, there's no penalty, and no need to make up any money later on, kind of like a 401k.
Oh, good.
Right? So that's why we actually say zero is your hero. So your principal and past gains are all protected if the market goes down.
All right. Now, this is fun to think of. We don't want any losses because who knows what's going on going forward. We hear so much information about the economy and is there going to be a bubble burst, effect because of AI? Are we going to lose more and more jobs going into Christmas? And on and on. People have all kinds of questions and concerns. So
I will say this. There's, and this is just my guess, but I want you to consider and follow me. So in '89, I was in senior in high school. I remember being in Mr. Brown's class. He was a history teacher. And the market had crashed in 1989. If you remember that, that's kind of when it was. And so you fast forward to 2008, 20 years later, almost 20 years later, we had a crash. Didn't we? Yeah.
Yes, we did.
So if you look at 20 years later, it's coming up soon.
Okay.
We probably are gonna have a crash. I didn't make it up. And if you probably look at 20 years before 1989, there's probably another crash. It's probably going to happen. So I think, and it's not a doomsday type of discussion I'm not trying to have, but I think that folks need to realize that course corrections will happen. And as you start to age, and we've talked about this before, if you have money in your accumulation bucket, which means that you're in the market, you're going to have an issue if there is a course correction. However, if you have money in a preservation bucket, you won't have that issue. So it based on where you're at, as far as where your retirement is, if you're pre-retiree, 50 plus, maybe even 45 late, you may want to start to consider alternatives because probably in 2-3 years, something's going to happen.
I like preservation bucket. The sound of that sounds really good. And that's what you mean by a Roth IRA. Your Roth money is preserved in there.
That's correct. Some sort of index annuity, fixed annuity, or even an IUL if you want to do an IUL.
Love it, love it, love it.
So this is what we do every day. We help people understand how to use modern financial tools the right way. So if today's discussion sparked some sort of question for you, maybe you're wondering whether an IUL could actually work alongside your current retirement account, this is your opportunity. For the next 10 calls, we're offering a retirement income review as part of your financial fast track review, absolutely free. This is what you'll get: a personalized IUL design review to see if this strategy fits your retirement picture, a tax analysis to identify where you may be overpaying and how a tax-free income could actually help balance things out, and a comprehensive income plan that shows you how to coordinate your 401k, your IRA, your Roth, and IUL to actually create steady, tax-efficient income for life. This is all about making your money work smarter, not harder, so you can actually retire on your terms. Again, it's completely free for the first 10 callers.
888-548-0409. 888-548-0409.
Retirement means a new phase of life, and managing risk is crucial. At Long Financial Services, Tod Long and his team build comprehensive strategies designed to minimize risk, generate reliable income, and help you stay proactive through every market condition. Discover what your retirement plan could look like. Call 888-548-0409. Again, that's 888-548-0409.
Hey, welcome back to the show, Financial Fast Track with Tod Long. I'm Jackie Selby with Tod Long, and we're talking about something very interesting to me. It's called an IUL, and we did some explaining in the first segment about exactly what it is, Indexed Universal Life, but it's kind of an interesting character. It can wear a lot of masks in the play of your retirement, right?
It can. It most certainly can. Like I said, it's a jack of all trades.
There you go.
Yeah, of the life insurance world, I would say.
Okay.
But I will mention that the key word when it comes to these IULs is actually loan.
Loan?
So yeah, loan. So when you build cash value or the IUL builds cash value over the years, you can actually access that money through policy loans, not withdrawals. And here's why this matters. So loans from a life insurance policy aren't taxable because technically you're borrowing money against your own money. So the insurance company uses your cash value as collateral. So you get access to your money, the account continues to grow, and you don't, owe any income tax on what you borrowed. So it's important to make sure that distinction, that it's a policy loan, but it's against your own money. I will mention a term that's out there and it's been out there, and I think insurance companies don't really like it. It's called infinite banking. And that's what this infinite banking concept comes from, is that and this is really, and I've done these before, and maybe this may be a show later on, but it's for people that have ample amounts of money, but they don't want to use the bank or whatever it is for certain, expenses or purchases or whatever. You can actually put that money into these index universal life policies the correct way, still IRS, sanctions and everything else,
yes.
not turning it into a mech, and start to take loans from their own money or, own money using collateral that's based on the cash value they actually put into that account. It's a great concept. Again, great concept. This IUL can do a lot of different things for a lot of different people, no matter their budgets.
I have heard about that. Create your own bank.
Mm-hmm. This is what this is.
Right. And this is done often with large family trusts and all this stuff. And it's not taxable because it's private, right, with the insurance.
Yep.
It's not like you can just go online and find out. And I did that recently with the Kennedys. I don't know. I get on a Kennedy jag from once in a while. But anyways, they from the 1920s, the dad, Joseph P. Kennedy, started all these trusts and stuff to protect the money. And the family thing, it's worth so much money, and everybody draws money from it. Yeah. Like 30 people and their descendants and stuff draw an income from it.
All facts, and you're absolutely correct. And I've seen to where folks use these, the infinite banking type concepts to do generational wealth transfer. We're talking millions and millions and millions of dollars. And sometimes to get things set up like this, it costs under $1 million. To get it all set up. Once it's all set up, it's crazy how much money you actually can make and transfer tax-free, get those loans out, get the money out tax-free for any kind of beneficiary you may have long after you passed away. So this policy is really a jack of all trades. When I say it's a jack of all trades, it is. Absolutely.
Okay, this is very interesting. I'm going to give out your phone number, 888-548-0409 to call Tod Long, 888-548-0409. And this will place you right into his calendar so you guys can have a sit down or a Zoom meeting, whatever you'd like to do, about what's going to happen with your retirement dollars. So how does this, we were talking about wealthy people, but how does this play for the average family?
Well, the average family is just like a wealthy person. They still have to pay taxes, right? And so the reason why people call this a tax-free retirement strategy, no matter their income level, is the cash stays inside the policy, grows tax deferred. When you borrow money against it, those distributions are tax-free as long as that policy stays in force. And then when you pass away, any remaining death benefit goes to your beneficiary tax-free. It's like triple tax saving, tax advantage. So it's tax deferred growth, it's tax-free access, and it's tax-free transfer, all within one policy. It's a really good solution if you want to either have access to money right now or in retirement, or pass it on to your beneficiaries later on in life.
Okay, so Tod, this can play. I know you've said it, but I just think it bears repeating. This can play along with your Social Security strategy and with your other investment strategies. This is not replacing what you want to do for your retirement money. This is in addition to?
That's correct. And we'll tell a story here in just a second about Mark, Mark I met probably 20 years ago. He became a client maybe 18 years ago. And I talked to him about an IUL at that point in time, and he did it. And his whole goal was, well, I have 401ks, I have, traditional, I think he had a Roth at that point too. But I wanted something else. He wanted an investment. And so I didn't really talk him out of the investment, but I just showed him a different way to use that money, basically, because I don't do investments or anything like that, but that's what I did. So we'll tell that story, but it doesn't replace anything you have.
All right.
In some instances, it can be used in lieu of those, if you don't have access to 401k, let's say, then you can actually do an IUL. It's going to do the same thing, right? It's going to grow tax deferred, et cetera. And you have all these triple tax advantages that a 401k technically doesn't have. But so to answer your question, it does not replace anything. It doesn't replace your traditional IRAs. It doesn't replace the 401k, 403b. This is in addition to, but in retirement, the money that you have in this cash value IUL is tax-free, provided the fact that you access it correctly.
Okay, and all that, of course, is explained by you to whoever is interested in this, and so it's kind of a hat trick of a thing.
Yes, it is,
because of all the different advantages, and it's, I don't know, it seems like it's very flexible. Like it's a flexible policy.
You know, you're absolutely correct, and one of the big benefit of an IUL is flexibility, because it's a jack of all trades. It has lots of different components in that particular product. Mm-hmm. So if you decide, well, technically, you're the one who decides when to take money out of this IUL, how much you take out, et cetera. There's no RMDs associated with an IUL. So if you want to supplement your income early in retirement, say you want to, retire at 62, but you don't want to get Social Security until 67, you got 5 years you got to worry about. Guess what? They're on your cash value IUL. Not a problem. If you want to strategically manage your tax brackets each year, you can actually pull from your IUL instead of your taxable accounts like a 401k or 403b. You can take the money out of your cash value IUL instead. So there's multiple different ways to actually use this in retirement planning to your advantage tax-wise. That's what I'm looking for.
Tax advantaged.
Yes.
Now, I like the sound of that. Do you want to talk in this segment about how to fund this gosh darn thing?
Yeah. So let's talk about that. So let me also mention before I even talk about how to fund it, is different from an IUL than an index annuity. An index annuity, you don't really have to qualify for it. If you have the money, then you put the money in and you're good to go. An IUL, it's a life policy. It's no doubt it's a life policy.
Okay. So it's written on one life?
It can be written on 2 lives.
Okay. All right.
Yeah. But it's when I say it's a life policy, it means that there's underwriting involved with that. Underwriting means there's information we have to collect as far as your height, weight, age, sometimes occupation. All those impact the premiums that you put into the policy, that you can put in the policy. Those premiums is I don't want to go too in the weeds on what cost of insurance is, but how you fund, to answer the first question, how you fund an IUL is based on the premiums, but it's also based on the cost of insurance as well as the death benefit. So what we try not to do, we have software to do this. We don't have to make any kind of erroneous human mistakes.
Not using a ruler and
we're not using
all
a
this
ruler,
stuff.
anything like that. Plus checks and balances or whatever it is.
Yeah.
But we have tools that make sure that whatever that premium is, it stays within what we called. Well, actually, we don't call it. It's an IRS code. It's modified endowment contract. If it goes above this MEC, then it turns into a modified endowment contract, which means that the IRS is going to take taxes out. So that's why it has to be properly structured, properly funded. If it's funded correctly, then you can have ample amount of money later on down the line, and I'll explain that in a second. But if it's and it's also got flexibility in the premium as well, meaning that if we have a target premium of, I'm just going to throw out some numbers here, $1,000 a month. Something happens. Life usually does happen.
Yes.
I got to pay for X. I got to pay for Y unexpectedly.
Yes.
Well, as long as there's enough money in this policy, cash value wise, well, I can skip a payment. No problem. I don't do $1,000 a month. I don't have to do $1,000 this month, or next month, et cetera, as long as there's cash value in it. And and the other thing that I'll mention is that this product isn't something you can use as a means to circumvent paying taxes. So in other words, you can't put a lump sum of money into this account
to hide it or something.
Yeah, and hide it and push it over into a MEC, because there's checks and balances, guardrails, if you will, in this policy to make sure that does not happen. And if you again want to do the Kennedy thing or do the infinite banking, there's ways to do that, but we have to do that up front, so we can actually structure it correctly, and so have the right kind of cost of insurance and the right kind of death benefit associated with that. How much, whatever you want to do as far as long-term goals, it's all set up correctly, set up properly, such that we can actually do that still without it going into a Mac. So anyway, we do a lot with IULs the right way, and that way you can benefit from it.
I'm learning so much.
Yeah, and so the whole thing is where a professional designed IUL makes the whole difference. So if you'd like to see how a properly structured index universal life policy could actually create tax-free income while staying fully compliant with IRS guidelines, this is your opportunity. For the next 10 callers, we're offering a tax-free income blueprint as part of the Financial Fast Track Review. Absolutely free. Here's what's going to be included. A tax-efficient audit to identify how future tax increases could affect your retirement income. A custom IUL design showing how to build tax-free income safely without triggering a modified endowment contract. And a retirement income plan tailored to balance protection, growth, and predictable income for life. This review is your chance to see how all of the pieces fit together. That's your 401k, that's your IRA, a potential IUL in one integrated strategy. Again, this is a tax-free income blueprint. It's part of your no-cost Financial Fast Track Review, but it's limited to the first 10 callers. So Jackie, please tell the listeners how to get one of these spots.
Claim that offer to sit down for free. First 10, 888-548-0409. 888-548-0409. Have Todd explain this to you in person. 888-548-0409.
Is your retirement plan starting to feel generic? You're unique. Your retirement strategy should be too. At Long Financial Services, Tod Long customizes each plan specifically around you, your life, and your goals. For a personalized review of your retirement, call 888-548-0409. Proudly serving Oklahoma. Again, that's 888-548-0409.
So glad to have you here on the show. Financial Fast Track with Tod Long. Boy, you were fast too. Let's see. You got the championship for the 4x4, right?
Yeah, World Championship?
Yes.
Yes, we did.
World Indoor Championship in the 4x4.
Yeah, it was 95. Yeah.
That's meet 400 meters.
That's correct. I mentioned I wasn't a 400 meter guy in high school.
Oh, I see.
Yeah, but as I got older, Coach Martin, he got us really in good shape and as a collegiate. And then honestly, I didn't really train for the 400 meter when I was professional. I specifically trained for the 200 meter, but I told my coach, my professional coach, that if you train me for the 200 meter, I can run the 100, I can run the quarter. Makes no difference. And that's what I did. So I was able to do both. But we kind of erred on the side of did we? No, we really specifically focused on the deuce and I'm sorry, 200 meter.
200, I get it.
Yeah.
I'm following you.
Speak.
Believe it or not, I'm following.
Yeah. And so a lot of sprinters back then, they didn't really do all three. And I was one of the ones that did. I could go and compete in the 100, or I can go compete in the 400 meter as well as the deuce. So it was fun.
How fast did you run that 200 meters?
Yeah, on time is 2028. I've dipped into 1993 was the actual fastest time I've ever done. But I couldn't get it ratified. So at 2028 is what it is.
Okay, let's count 19 seconds. Just kidding. Your feet move so fast, you can't even see who's doing what. It's so fast. Anyway, yeah. I just admire that so much.
It was fun running fast. I still drive fast too. I should not be running as fast, but it's because I need that speed.
It would be like a movie. Well, my car's not moving fast enough. I'm going to hop out and run. You could get some endorsements, Todd.
Yeah. As an old man, I probably couldn't get too many endorsements now.
Oh, golly, that is fun. All right. Now, we've been talking about IULs on the show today, the Financial Fast Track with Tod Long, and he's been explaining what the IULs are and what they do and what they mean. And in case you've missed any of our program, you can listen to it again. We have it up in podcast form anywhere you get your podcasts, including Financial Fast Track Radio.
That's correct.
FinancialFastTrackRadio.com, or just on Spotify or Apple or whichever, they populate there too, called Financial Fast Track with Tod Long. So that's kind of fun. Mm-hmm. There's not too many that say Financial Fast Track on the podcast scene.
Yeah, that's good.
So you can hear what we're talking about. So tell me about one of your real life stories with one client. Is it Todd that we're going to talk about and how he built some wealth with an IUL?
Oh, Mark. Yeah.
Mark. Thank you.
Yeah. Mark. I met Mark.
You're Todd.
Yeah, I'm Todd. Yes. Although I do have some Todds that I have as clients.
Okay,
They spell
all
the
right.
name with 2 Ds though. But
Oh, that's right. You're just one D in
I'm just one
Todd.
D. That's correct. So yeah, I met Mark roughly 18 to 20 years ago. I forgot which, but anyway, he became a client about 18 years ago. And he was, had a good income, and I think it was 48 at the time. And, he was consistently saving his 401k. He had a traditional IRA, and he already had started doing some Roth savings. And again, he wasn't looking for another, investment, I would say, but he was actually looking for some tax diversification. And so his biggest concern was that in retirement, most of his income, which again, a lot of my clients are in a situation, all of them were in taxable buckets. 401k, Social Security is going to be taxed. The RMD is going to be, hitting. His traditional IRA was obviously going to be taxed. All those things were going to be taxable later on. So together, what we did is we designed an IUL to actually complement those accounts, something that would actually grow tax deferred and later provide tax-free access to cash once he needed it. So I will say that this wasn't replacing any of those accounts, right? He was just adding another bucket of tax-free income. So I want to make that distinction.
Okay. It's not like he was going from one thing to another and here's all my dollars.
Right. That's correct. He added. This was an additive account to his portfolio that ended up being really, really nice for him that he's still currently using.
At 65.
At 65, yeah. So really what happened is that, so he contributed $1,000 a month into this policy for about 15, 16 years or so. So we had designed this policy for, again, maximum cash value or cash accumulation, minimizing the insurance costs as much as possible, and actually safely staying within that IRS guidelines to actually avoid that MEC that we talked about earlier.
Right.
So he never tried to dump extra cash. He actually called a couple of times and said, "Hey, I got this extra cash. Can I do this?" And I said no. He built this money slowly. He did it the right way.
Okay.
So over those years, this policy actually captured steady index credits, averaging about 7 to 8% annually over growth. There was no market losses along the way. So we had a lot of hiccups from 17, 18 years ago until, a couple of years ago when we started to access the cash. Obviously 2020 was one, as he was coming out of actually 2008, if I recall. And that was a hard time as well. So I think 2022 was another time as well. So anyway, he missed all those things because of what he was doing with this IUL.
That is fantastic. And you're still he's still your client.
Yeah, he is. I mean, we do a lot of stuff
other
together.
things.
Yeah, of course. Yeah. So, we look at today what's going on. So Mark's now 65 years old. He retired. Not sure exactly when he retired, but it was recently. His IUL has built over $850,000 in cash value. $850,000. From that, he's comfortably taking $50,000 per year tax-free in policy loans. So what this actually means is his account is earning roughly about, let's call it 8% a year. He's withdrawing $50,000 annually. So that withdrawal rate is only 5.9 of his whole account value. So what that means is that his 8% return, interest earned in a year, it's around $68,000, exceeds his $50,000 he's taken out. So instead of the account shrinking, it's
growing.
Still continuing to grow.
Oh, for crying out loud.
Yeah, it's pretty awesome.
Okay. I have questions. Now, in this scenario, I just can't get over $50,000 a year with no taxes taken out of it.
Correct.
That's just like unbelievable.
Yeah.
But you call it a loan from his IUL. Does he have to pay it back?
No, actually, he doesn't. Okay. So in the event of his passing, because as long as there's value in the cash value that's there, the loans, that's the collateral. So once he passes away, if there's any outstanding loans, then the cash value will actually pay out those loans, and what's left will be paid to his beneficiaries tax-free as a normal death benefit. So everything is all on the up and up. Doesn't cost anybody any taxes. He doesn't have to pay taxes on the money he's received. The money gets, if you take the loan out, the money's paid back from the cash value in his cash value IUL, and then what's left is given to his beneficiaries tax free.
I see. As long as that loan is covered.
Mm-hmm.
So that's the whole incentive to have it continue to grow.
That's correct. So, and that's also what makes it not a modified endowment contract. If you start taking loans out and you don't have, number one, the insurance company won't allow a loan if you don't have enough cash value in that for collateral, right? And so if you let the policy lapse, or again, if you have, his is not going to lapse at all because he has pretty good cash in there. But a lot of folks may have, let's call it $150,000. It's a new policy, and they take out $50,000 and $50,000, and that's $3,000 amounts out. So guess what? You have no more cash value. If that policy lapse, then that $150,000 is now taxable because you can't pay it back. Oh, right? There's no more collateral unless you pay it back. I should say you got a $150,000 check, stroke it, and then you're good. But usually people don't have that.
Is the benefit then to having an IUL is something that you set up when you're younger?
That totally depends. I have gotten people in their 60s IULs.
All right.
They don't perform the same unless they have ample premium, right? So a lot of folks, it gets more expensive. It's life insurance. You have to qualify for it based on your health. And so, okay. So if you're 65 years old or 60 years old, if you're tip top shape, these folks were, I can get the cost of insurance to be low, and they have enough time to where they can actually fund the IUL properly to where there's going to be some benefit from it. Most of my clients who actually start IULs are traditionally in the 40s. Sometimes they're 30s.
Oh.
Yeah. But I have been able to get people in their 60s an IUL.
Okay. Now, we got about 2 minutes left, but I think you can answer this question. How much money can you start an IUL with? Is there a limit?
There's not
or a minimum.
Well, no. Yeah, there is a minimum. The insurance company will actually determine what that minimum is.
Oh, I see.
There's going to be a minimum payment. There's a target payment. And then there's the maximum payment you can actually put in that doesn't turn it into a modified endowment contract. So in the illustration, and once, we'll get to an offer in a second, but in that illustration, it'll give you all three. So it has flexibility. You can be in, as long as you're within those three ranges, everything's copacetic. The insurance will stay in place if you have to go to the minimum. If it's targeted, everything we're basing the insurance on as far as I want to do X at age 65. Let's say you're 40-something years old. At 65, I want to be able to take $50,000 out. That's going to be the target premium, right? See. And then you have the maximum amount. So if you do get a bonus that doesn't push you over that modified endowment contract, yeah, we can put it in there because it's not going to affect the tax implication on this account. That let it get in there and start to do triple compounding and interest and all that kind of jazz and reap the benefits. So you have those three
compounding.
You'll have those three different options in these illustrations. So if you like to see how tax-free income stream like Mark's could actually fit into your retirement picture, this is your opportunity to make this happen. For the next 10 callers, we're offering a tax-free retirement income analysis as part of your financial fast track review, completely free. Here's what you're going to get with this. A personalized IUL illustration showing you how much tax-free income you could potentially generate, a retirement tax map to coordinate your 401ks, your IRAs, your Roth accounts, and your IUL for optimal tax efficiency, and a customized income strategy designed to reduce taxes, manage RMDs, and actually create more predictable lifetime income. This is all about clarity, control, and confidence, knowing how you can each of your plan works together to deliver lasting income. So again, this is tax-free retirement income analysis as part of your no-cost financial fast track review, but it's limited to the first 10 callers. So Jackie, please tell the folks how to get in contact with us.
This is a great number to use, easy to remember, 888-548-0409, 888-548-0409 on Financial Fast Track with Tod Long.
Investment advisory services offered through Tod Long, a registered investment advisor. During this show, Tod Long provides general information, not individually targeted personalized advice, and is not liable for the usage of information discussed. Exposure to ideas and products or services should not be considered investment advice or a recommendation to buy or sell any of these financial vehicles. This information should also not be considered tax or legal advice. Individuals should consult with a professional specializing in the fields of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Past performance is not a guarantee of future results. Investments will fluctuate, and when redeemed, may be worth more or less than when originally invested. method. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to securities or investment advisory services. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are offered through Tod Long. By contacting Tod Long, you may be provided information regarding the purchase of insurance products.